And today we have Emma from Toronto. What's going on in Canada's largest city?
So we are heading into one of the higher inventory seasons, which is great news if you're a buyer. You might have a little bit more competition if you're a seller in the next couple of weeks, but nonetheless, buyers seem to be coming out of the woodwork right now. So there's definitely more activity at least happening in the Toronto market. Been a little while, Ed, since we've seen green on the screen. We've seen a lot of red over the last couple of months. You'll notice it's been quite some time since we've seen these sticks start trending upwards. We've seen a lot of downward trending lines over the last little while. So
if you compare how busy you were in January and February compared to how busy you've been in March, how's it looking?
We're very busy right now. I don't think I've been this busy since like the end of COVID.
Hello YouTube, welcome back to the Canadian Real Estate Channel. My name is Ed Hervias, multifamily investor, longtime friend of the channel, and today we have Emma from Toronto. She's going to be sharing some insights as to what's going on in Canada's largest city.
Yeah, good to have you as a host, Ed.
Thank you. Likewise, pleasure meeting you.
Yeah, you too. Yeah, I'm looking forward to hopping into the numbers. So I guess for anybody that's new, at least to the Toronto market update, if you're new, I've been doing this for the last, I think, 24 months. So if you want to go back and see any other of these market updates, my face has been on the channel for the last little while. But in today's video, we're going to go through the month-over-month data and year-over-year data in Toronto for every sector. And then we're going to talk about some really important metrics that we're seeing. And we'll talk even more so about some boots on the ground stuff that we might not be able to even see in the data, just in terms of, buyer sentiment to seller sentiment, and how we're starting to see the market progress as we head into the spring market, because the spring market traditionally is when the bulk of the trades happen, at least in the first half of the year. So we are heading into one of the higher inventory seasons, which is great news if you're a buyer. You might have a little bit more competition if you're a seller in the next couple of weeks, but nonetheless, buyers seem to be coming out of the woodwork right now. So there's definitely more activity at least happening in the Toronto market.
For sure.
Cool. Let me just share my screen with you and we'll dive right into the numbers. So
excellent.
Just before we get into the numbers, if you're a viewer and you're watching this today, I actually wrote a renter to owner guide, which goes through 5 different strategies that you can utilize or implement in 2023 to help yourself transition into purchasing your first home if you're kind of on the fence. So there's 5 individual ones in there, but then what I explain at the end of that guide is something called a strategy stack. So can you take 2 or 3 of those things, given your personal situation, and add them on top of each other to help you be able to actually transition into home ownership, should you so choose to do that. And if you want to get access to it, it's completely free. There's a link in the description below. Read through that, and it's a couple, cool hacks that you can use to help yourself transition from renting to owning, if that's kind of on the horizon for you. So let's talk a little bit about market activity in Toronto. So first, we'll discuss the year-over-year and month-over-month performance. Been a little while, Ed, since we've seen green on the screen. We've seen a lot of red over the last couple of months. And so for anybody that's new to the channel, on the right-hand side, I have the month-over-month numbers, and at the bottom, we're going to look at the year-over-year numbers. So last year, and we're looking at the February data in this market video, just because we're always 30 days behind for data. So we'll get the March data in the April video that comes out next month, just as a little teaser for you on when you can expect that. But rewinding 12 months from now, or previous to now, was essentially the peak of the market. And so these year-over-year numbers look quite bad, because we're actually comparing them to the exact peak of the market. But if we look at kind of where we're trending right now, we're down about 17% for detached houses from last February. We're down about 15 for semis. We're down about 15 for condo townhouses, and we're down about 11% for condo high rises. Now, you'll notice it's been quite some time since we've seen these sticks start trending upwards. We've seen a lot of downward trending lines over the last little while. So we've seen an uptick, but however, with that being said, we'll see how long-lived this will be. I think we'll continue to see this trend probably closer to sideways instead of this aggressively, especially as we get past the spring market. All right. So if we're looking at the month-over-month trends, condo prices were up about 2.5%. So average condo price is about $728,000 in Toronto right now. Condo townhouses have stayed flat, so they're about $825,000. Semis have increased from 1.15 to just shy of 1.3. So again, we've gone up about 11% month over month from January to February. And then detached, we basically went from just shy of 1.5 million to just north of 1.7 million at this point in time for the average price point.
Okay, and so what are you hearing from your clients right now in terms of what they see from other properties that they're looking at? Are they hesitant based on the price, or how are they approaching their acquisition or sale from the people that you're talking to?
Honestly, good question. It really depends on neighborhood data specifically, right? So in a second, I'm going to show you some trends from the suburban markets, but it really depends on what's happening within each neighborhood or city specific for sure. Now we're hearing rumblings of all sorts of stuff that's happening, right? You're hearing bidding wars are back. You're hearing the market's still really cool. Like there's a lot of great media headlines for them to be able to run with because the market's kind of all over the place right now. So what I would say, just to kind of give you an example, we'll look at the condo stuff in a little bit, but from January to February, we did see a drastic uptick in how many properties were selling in bidding wars or how many properties were going over the asking price. So someone could take that one data point and run with it. Properties are up, bidding wars are up. But if you look at it in context, it did increase significantly, but it's still only 1 in every 4 when you actually look at the data. So yeah, if nothing was selling in bidding wars before and we go to 25% of them, that's a massive increase in comparison to what we saw before. But we shouldn't be setting the tone that every single property is selling over asking, when really sometimes, depending on what you're reading or depending on where you're getting your information, it can be skewed to make you feel that way from a FOMO perspective. So the truth is there are many properties that are selling over asking and going in bidding wars, and the buyer demand, it's very evident that the buyer demand is back in the marketplace. But to expect that we are going into a bidding war for every single property that we're approaching with buyers and or listing for sellers would be foolish to assume without looking at the very specific data that's happening within their building, their neighborhood, their city, all of that kind of stuff, so that we can guide them in the appropriate fashion.
Okay, and do you find that most of us, at least some of your are your clients concerned that there may be a bidding war, or are they taking their time in asking you to show them different places? Yeah,
so I think we do a really good job of setting the right expectations up front, right? So typically before we go out and go on any initial property tour, we'll assume we're talking about buyers at this point. Before we take any buyers out, we do something called a strategy call. And during that strategy call, we actually conduct it via Zoom. And what we'll do is we'll assess, what's your goal? What are the criteria that you need? What's the location that you want to be in? The budget, everything. We talk about everything that you need and you want. And then what we do is we actually share the back end of our MLS, and we log in and we look at what has actually sold in the last 60 to 90 days. And based on what you told me that you wanted and based on what's actually happened in the marketplace, are those two things in alignment? Or are you telling me that you want something for $2 million, or something for 700,000 that is only selling for 2 million when we actually look at the data. And so when we look at both of those things to set the right expectations, I will also let them know, well, based on everything that has sold in the last 60 days, let's say there were a total of 30 sales. 15 of them went in bidding wars and 15 of them sold in a traditional fashion, meaning that they sold at or below the asking price. Then I know that I need to train you on having the expectations that either or could happen in your dream, and for your dream house, because 50% of the time things are going over asking and 50% of the time they're going at asking. And then what our buyers can let us know is, well, I only want to look at the ones that are going or that are marketed in a traditional manner. I don't want to compete. And then we can talk about, okay, no worries, let's focus on those first. And if you're not finding the inventory that you're looking at, then we can expand our criteria and we can talk about a different strategy at that point in time.
Okay, that's fantastic. So you have a whole approach before you even hit the road.
Totally, because the thing is, the worst thing that I could ever do, I think, for a client is to go and show them a bunch of properties, right, without understanding what they really want, what they really need. And then I go and show them these beautiful houses that, of course, they're going to want. Like, I want to go see beautiful houses. I don't want to go look at dumps, when on my first initial property tour. Like, I'm kind of excited about this. So the worst thing I could do is go out, show them all these properties without asking any questions. They fall in love with this property, right? And they're like, I want to buy this one. Like, I want to live here. We go back and we realize it's not even close to being in the criteria of what they can afford. What did I do? Yeah. I just ruined their entire experience, because that's always going to be the benchmark, because now they're like, that's the one that I wanted and that's the one that got away, when really we shouldn't have even seen it in the first place.
Right.
So what I did was, I selfishly, as an agent, went to go meet someone in person, because I know the likelihood of me converting someone to a client is really high if I meet them in person. But it might actually be the wrong, I honestly think for the most part, it's actually the wrong way to go about it, because you could really set the wrong expectations with what somebody could afford or what's actually in their best interest by showing them something that's listed at $699 that ends up selling at $950. And they're like, why would you show me this house? And you're like, yeah. I wanted to meet you in person.
Yeah, no, that makes perfect sense. That's very honest of you, for sure. No, definitely.
All right, well, let's look at the suburban markets, because we're also seeing some green on this slide, which is good news. So we'll start with Durham. Durham was relatively flat last month. So average sales price in Durham, and this is taking into consideration everything, right? So condos, detached properties, everything in between. Average price point was $888, so just shy of $900,000. Peel, and what I think is most interesting, if anybody had watched last month, was 3 of these 5, the average price point in January was less than $1 million. And that only happened in January. And then we, within 1 month, have 4 of the 5 that are now back above the $1 million average price point. So you can see here, Durham's still under 900. Peel is trending just over $1 million, and we are at 999. As you can see, here's the previous month's numbers. We're back over $1 million. Halton, we've gone up past 1.2, so 1.2 is the average price point. Toronto, we're back over $1 million, so we're trending at just below 1.1 for the average price point. In York region, we're looking at about 1.3. So these 3 looked really exciting, because we actually hadn't seen anything cross, other than Durham, we hadn't seen anything cross $1 million average price point to the downside in a while, but It was fairly short-lived. It was 1 month, and now we're back over. So just to kind of showcase where we're trending. But again, our general trend for the last, I don't know, we'll say 7 or 8 months or so has been, we had a steep decline, and then we kind of traded sideways for the most part, or we saw that decline kind of minimize, and now we're trending back upwards. So curious to kind of see how the rest of the spring market plays out. Obviously, I think interest rates are not necessarily a change in interest rates, but the lack of continued increases has at least brought back some positivity and optimism for buyers. So, and again, I've said this before, but obviously interest rates are clearly a driver of, you know, what happens within the marketplace. But I think the actual most powerful thing that affects what happens in the real estate market is like consumer sentiment, and interest rates is a driver of that. And so what we've realized is interest rates are the same price. It's the same rate this month, last month, and close to the month before. But why all of a sudden our is going back up? And it's like, because consumer confidence has come back in as a result of the holding of rates. And so to me, I'm like, I actually think that is the most powerful driver. It's just a really hard thing to quantify because it's like emotion, and it's not just like definitely a number on a piece of paper, right?
No, absolutely. And it shows, it also shows the strength of the market of how people are willing, they need to move, right? And Canada is growing, Toronto is expanding, and despite these interest rates, yes, it didn't go up. They're still relatively high from historical over the past 10 years. Yeah. But we'll have a need and a want to grow, you know. Yeah. And that's what we're seeing here.
I agree with you. I think you know, the dream of home ownership hasn't gone anywhere. It's just kind of got like delayed a little bit. We just kind of pushed it back now. And it was like, well, we'll just keep pushing out our time frame. We'll keep pushing out our time frame. But it's you know, it's kind of like a slingshot. Like you continue to pull it back, and we wait and we wait and wait, and then there's like a point where it's like, okay, well, this thing is still here. We kind of got to let it go. And so we've seen that happen a little bit on this side. It's just a matter of like, how far is that thing going to shoot before you know, that slingshot, whatever we're shooting, the rock falls down or whatever, right? So we'll see as we continue to progress. But I think, you know, given the conversations that we're having on our side, there's definitely still you know, inherent desire for people you know, to have bigger homes or get into the market or transition and downsize, as we have many more. You know, I think they said like right now we have about 10,000 baby boomers retiring every day. So we have many more retirees that are looking and thinking about like, hey, what am I going to do? Where am I retiring? Where am I going to go? So there's a lot of moving parts when it comes to transitions for like even generational transitions that are happening right now. And real estate is a byproduct of what's happening in transition. And so the whole interest rate thing definitely put a pause. But with that being said, I'm not an economist, so I'm subject to whatever happens in the future as well.
We're on the ground for sure.
Yeah, exactly. And then just to go like quick overview for you guys on where we were at from the peak to current prices in the suburban markets, because I know we already talked about Toronto itself, but Durham was at about 1.2 last February, and we're at about 888 right now. So the market has pulled back about 28% overall from the peak of the market last year. Peel was at 1.3, and now again we're just above that $1 million mark, so we're about $1.30, and so we've pulled back about 20% from the peak of the market. Halton was at 1.5, we're now at 1.22, and so we've pulled back about 20% from the peak of the market. And then Toronto, we were at 1.2, and we're just shy of 1.1, so we've pulled back about 11% from last year. So, you know, if you had purchased last February, you look at this, and this kind of gives you a scope as to where the general market value could potentially be. But the one thing, and I put this on the Toronto slide, what I did was I actually showcased what that trend was. So last month for condos, we were at about 14%, and now we've closed that gap a little bit to 11. And so we're starting to see that gap and that spread close a little bit as purchase prices come back up. And so I'll continue to showcase that in the coming months for the market updates. But as you can see here, just depicted by these arrows, I've showcased if this reduction, you know, this pullback has actually closed a little bit, or if it's widened. And you'll see that only the condo townhouse sector stayed the same. It was 15% last month, and it stayed the same this month. Every other segment of the market, that gap has closed a little bit, obviously, because we've seen price growth.
Okay, very interesting.
Cool. Yeah. This was one of the most interesting pieces of data that I think came out this month. And that this takes into consideration just the average home price across the GTA. So everywhere in the GTA and every single style of home, if we can boil it down to one price, it's just the average home price across, right? And so that's what this number is. And February of 2023, we're at $1,095,000. So basically 1.1 almost. Now, what I wanted to do was go back and I was like, well, when was the last time that we actually saw this average price point? Because it's been a while. Like I knew we were hovering in that $1,070,000 to $1,050,000. And so what I thought was really interesting is you can see here, we kind of, you know, this isn't a massive movement. Like, you know, $1,074,000, $1,079,000, we went up a little bit, we came back down. Then we started to see prices drop in the winter as we typically do. But what I thought was really interesting was within 1 month, for the average price point, we reverted back by like 6 months back to this average price point being June of, you know, we'll say end of June, between June and July of 2022. So we had an average price increase of about 5.5 month over month. Now, again, we'll continue to see if this is sustained, what happens with prices going forward. But I think this metric does echo what you had mentioned earlier in the strength of the market and kind of that build up in demand and just people not making the transitions out of just waiting at the moment. And now we've started to see the, you know, the ball rolling again a little bit with activity. And it was just interesting to see that within 1 month, we went from under $1,040,000 and we went basically up to 1.1 across the board in the GTA.
Yeah, that's a big jump for sure. And I can't wait to see March. You know,
yeah, we'll see how we're trending for March for sure. You know, I suspect the number will be slightly higher given given what we've seen. I don't know. I think I would be surprised if we saw another 5.5%. I think it's a pretty big jump.
So
but
if you compare how busy you were in January and February compared to how busy you've been in March, how's it looking?
This is the busiest I've been in. I don't think I've been this busy since like the end of COVID.
There you go.
Yeah, it's you know, it's a good question. We're very busy right now.
There you go.
So we'll see how things go. But again, I think also it's I don't say that as FOMO whatsoever for people because they hear like, oh, real estate agents are busy and they're all out and they're on the road all the time and the market's back. It's like, yeah, it is. But we still got to set the right expectations with people to make sure that we're doing right by them and like advising them based on their own personal situation. So months of inventory, though, this was a big mover from the beginning of the year. So for the first time, again, since June of 2022, we've finally seen the months of inventory number. And this is taking into consideration Toronto. The green is condos and the black is freeholds. But we've actually finally seen this crack the 3 months of inventory to the downside. So what we know is when this trend is above that 3 months of inventory, we have more of like a balanced market, right? It's more fair for buyers and sellers because what this is representing is if no new inventory came to market, how long would the existing amount of inventory take to actually sell based on buyers' demand? So right now they're like, okay, well, it would take me about 2.8 months if no new homes hit the market. It'd probably take about 3 months for us to be out of inventory. So the lower this number is, the stronger the market is for sellers, and the higher this number is, the stronger the market is for buyers, because that means that it's a showcase of demand. And so normally when we see this number under 3, that means we are trending towards a seller's market and that there's more activity on the buyer side because inventory is being assumed more quickly. Okay. And so on the freehold side of things, under 2 means that's a pretty decent seller's market. And condos has held sideways between 3 and 4 for the last little while, and we finally cracked 3 to the downside. So I'm very curious to see, but this usually is an indicator to let us know what is happening with pricing, right? So if we start to see this line trend down, usually what we'll see is prices will continue to increase because this is showcasing that there's more buyer demand. And if there's more buyer demand, usually prices continue to increase. So curious to see how things continue to progress. But if you noticed, going back here, in terms of the trend line, well, let's even look at this. If you look at this trend line, we kind of traded sideways for a little while there between, July and October. And then if we look here, it's like, okay, well, this kind of traded sideways a little bit as well. And then we start to see this trend downwards, and what's happening with prices have gone up.
That's right.
Right. And if you look March to June, what happened? This went up drastically and prices came back down. So they usually they're usually inverted.
Very interesting, for sure.
Right.
Yeah, that's when all that stuff was happening about the new rate hikes. Everything happened so quickly last in that time frame, right?
Yeah, totally. So I kind of use this as a little bit of a gauge for myself to look forward a little bit and get maybe a better understanding of what could potentially happen with prices. So here, it's like if you continue to see this trade sideways, like it'll probably stay pretty flat. Right now we're trending down, but again, if this starts to flatten out, we'll have to see what we expect is going to happen with pricing in the future.
Right.
In terms of sales to new listings, and this, these kind of all marry together. And again, I just wanted to give a shout out to Scott because he preps some awesome graphs. So if anybody wants to be like a nerd like me and look into this every month, I would follow Scott because he always releases some awesome stuff. But if we want to just kind of look at, we have to put this all into context, right? And I show you all this and you're like, but what does it really mean? And so in order for us to understand what this really means is like, how many sales do we actually have though? And how many new listings? And like, what do we normally see if we look back? So what you'll notice is if we look at January, we had 3,100 sales that actually happened across the GTA, but we had 7,600 new listings that came to market, which means that our sales to new list price, which is what this is, was only at 40%. And so that's not very strong. It's like 40% of the inventory that's coming to market is selling in comparison to what's active on the market. What you'll notice is we actually had that number increase quite a bit. So we had about 4,800 sales, we'll say, and we had about 8,600 new listings that came to market. So when you see this number increase again, that shows you some strength in the market. Like, to be under 40% is quite low, and we saw that in May and June. So this will show you, this will showcase a little bit of strength in the marketplace. Now, let me go back to this in 1 second, but I wanted to kind of shine a light on what does this mean. So in comparison, if we look back through February for the last 20 years, it was still the second lowest number of sales that we've seen in the last 20 years. And if we put it in comparison to last February, which we already looked at, that was the second highest. We had 9,000 sales. So there was a lot of turnover and a lot of stuff going on. There was a bunch of commotion, and it's still pretty quiet out here, right? But we've had, in terms of listings, the lowest number of new listings in 20 years by a significant amount. Like in the last 20 years, there hasn't been a February that started with an 8 ever.
Right. So
we're like almost 1,000 new listings below our most previous, which was 2002.
Yeah.
So we don't have a lot. We still don't have a lot of inventory, and we have a lot of pent up buyer demand. And I think those two things is kind of like the rubber meeting the road for prices to go back up.
Right, for sure.
Right. And then just to kind of recap this for anybody that's in the suburban market, not in Toronto, so you can understand what's happening in your given market. Durham, the sales to new listings was 67%. So Durham activity has really shot up in February. York region was about 60%. Peel was 59%. Halton was 60%. So you can see they're pretty drastic jump ups from January to February. That is a strength in buyer activity, or a metric to show strength in buyer activity in the market as well. And then Toronto was about 52%, and that gives us the 55% kind of average.
It's interesting how they're all very similar to each other. There's not one above the other by much.
No. I mean, I think we've pretty much seen buyer demand increase across the board. Clearly, we're looking at the numbers, and buyer demand is showcasing its strength. But again, to not freak anybody out. Yeah, we've seen prices increase, but there's still sellers out there that are reasonable to chat with, and there's still sellers that are motivated, and there's still deals to be found. It's just right now, you really need a professional to help you right now. You truthfully, I would say, need to interview a couple of agents on who you're going to work with, because the market is all over the place. You really need someone who can boil this down and keep you as calm as possible to make sure that you're making the right decision going forward, because there's no reason to have FOMO on either side. Some sellers are like, we got to go hit the market. We got to do this right now. And buyers like, I need to buy something right now. And it's like, we all just need to calm down. and look at what's in the best interest for your situation long term.
And this comes back to how we started the conversation on how you do a qualification with them to qualify what they're looking for, because that's the best way to really go after what they want, instead of, oh my God, there's all these different cities around here. I want to live somewhere in the GTA. My price is this, but it's more than that. It's like understanding how it fits your lifestyle, where things make sense for you. Definitely. So that qualification is important.
I have to give some credit to buyers, like, especially if you've never done this before. Honestly, if I had not, like, I have obviously been doing this for almost a decade, so I have a lot of experience, and it's easy for me to sit here to be like, this is how you should do it, and it's the easy way to go, and blah, blah, blah. But if I was a first-time buyer, I can understand how they have those thoughts. It's like, oh my gosh, like, you know, I could buy anywhere, and should I just consider buying in Toronto because this is less than this, and what's going on, and I should just go there, and I need to go there, and it's like, no. Take a deep breath. It's all going to be good. Let's talk about you. Let's talk about what you want, and let's talk about the best situation that is going to, you know, work in your best interest, so that you're not like driving around on Saturday afternoons when you have other things to do. Like, you want to go hang out with your friends and whatever, go to the pub and grab a beer. Don't go drive to Timbuktu to go see a house that you have no interest in because you think it might fit within your price point. Save the time, sit down with someone, do a needs analysis, do a proper strategy session, and still enjoy your beer in the afternoon. Relax after you've done that, and only go see the things that actually work for you. Don't waste more time than you need to. It's unnecessary.
Excellent.
Well, okay, so we went through that. We'll go through the condo market update quickly. So we found this equilibrium that we typically see in the condo market again, and it's been out of whack for a little while. So this orange circle represents Toronto Central, which is going to be primarily comprised of CO1 and CO8. Excuse me. Which is, primarily going to be comprised of CO1 and CO8, which is the downtown core. And just so you guys know what you're like, what are all these numbers? They're just sexy terms for neighborhoods or regions in Toronto as described by the Toronto Real Estate Board. So us as agents know where to list properties and where to search for properties. Okay. So Toronto Central had about 620 sales in February. And you can see total across the board, we had 952, and our sales were up by 57%. So in all of the GTA, or all of Toronto, I should say, last month, we only had about 600 sales. We're up to 950. So we had a total of 620 sales with an average purchase price of $787. So we stayed pretty flat this month. It was $779, like not a whole heck of a lot of movement in the central region. Toronto West, which is, you know, primarily going to be comprised of Mimico region and across the subway line at Islington for the most part. That's where you're going to find the most inventory. Prices went up from 600K to about 645. So they were up about 7.5% with 200 sales. And then Toronto East, which is primarily going to be comprised of closer to like Scarborough Town Center or along the Shepherd line at least. Prices were actually down a little bit. So they went from 588 to 569. But if you're thinking about buying a condo in Toronto and you're like, where should I go? Based on your budget, at least you kind of have a good jumping off point as to where you might want to search based on affordability and price point. But normally what we usually see is downtown most expensive, the west second most expensive, and the east is the cheapest. Like, and we've found that equilibrium again this month, which was nice to see.
Yeah, it's been like that for a while. I remember when one of my first jobs was in Scarborough. And Scarborough Town Center, that's where the new condos were coming up at the time. Yeah. The East has always been traditionally more quote unquote affordable, but it really comes down to your time, you know, your lifestyle, where you work.
For sure.
It's way more than just this investment in your mortgage.
Yeah, and I'm gonna actually make another video on the Canadian Real Estate channel about this. But if you're thinking about buying in Scarborough Town Center, there's some massive changes that are happening for the next. We'll say 6 to 10 years or so that like you have to be aware of. And so I'm going to go through a full video on that, because if you have a long-term outlook for Scarborough Town Center, I think it's looking pretty good for you, but there's a couple of very short-term pain points that you're going to have to deal with. So you got to know that stuff in detail. Don't willy-nilly go out and just buy something in Scarborough Town Center at this exact moment, because there's some big changes right now.
So call you right away if you want to buy it.
If you're thinking about Scarborough Town Center, either call me or wait for that video to come out so you can see what's going on. But what I wanted to showcase here was because if you look at this number, like if I just showed you the average purchase price in Toronto and I said, hey, Ed, it's $787. You're like, and you're a condo buyer, you're thinking, well, I don't have $787. I can't afford $787, so I guess I can't buy a house, is what people would think, right? Especially if we revert all the way back and we look at the amalgamated price point of all these things. So what I really wanted to showcase here was, where are the properties actually selling though? And if we look at volume by price range, you can still see that most of the volume is trading between 5 and 700,000 here, depicted by this graph. And so you're obviously, and the reason why it's weighted up is because there's very few properties that are selling below 500K, but you still have these other properties at 700 to 800, 800 to 900. You have a couple at 2 million. So all of these combined are skewing that price point up. But it doesn't mean that you can't buy something under the average price point. That's why it's the average. So for those of you that are watching this video and you keep seeing this average price point and you're like, my budget's $550, I'm never going to be able to buy anything. Untrue by proof right here, because $5 to $599 is where the bulk of the trades are actually happening. So you definitely have options and you definitely have inventory. It's just you can't get skewed by that one big number. You got to break it down and to understand where those trades are happening. But what I would say is, like, if your budget's under 400, I'm sorry, but it's probably not going to work out. Very few options for you. But if you're at 5 to 7, you're looking really good right now.
And those higher prices, the average is pulled up in a way. Well, it is pulled up by the more expensive ones, and as we saw in a couple slides ago, the majority of the activity happens in Toronto Central.
Yeah,
so, and that will always be higher.
Of course, yeah, and kind of just to kind of showcase, this is actually if I double clicked on Toronto Central, just for the downtown people that want to know, I manually put this together to showcase what the heck actually happened. So we have CO1 on this side, we have CO8 on this side. And what I wanted to show you was just to be reflective of what I had mentioned at the beginning of the video, which was the above asking trend. And this is how I know this, because I'm a bit of a nerd when it comes to the data. So I like to know this stuff. Yeah. But if we look at, sales volume was up 32%. We had 208 transactions instead of 157. Average price point was up 3% for the west end of downtown to about 800K instead of 776. List to price ratio, though, so this is, the average listing, how much were they able to acquire based on their sales price. If this is over 100%, then that means that, on average, things are selling for over asking. But right now they're at 99%. So if you were like, how much should I expect to pay? And I know nothing else about you or anything, I would be like, you're looking to buy in CL1? Yeah, expect to pay what they're asking. Most of the time, probably, right? Yeah. And then, days on market are still, they've gone down from 32 to 27, but that's still almost a month on market for a lot of people. Now, there's probably a lot of carryover from people who had listed in January when the market wasn't as hot. So I suspect this month we'll see that number go down. But unless this is below 2 weeks, you still have options in the traditional sense. And then again, above asking, we had 16% of the inventory that sold above asking in January and 24 now. So if I just said to you, Ed, there's 50% more properties that are selling over asking, you'd be like, oh my God, I got to freak out. I got to go right now. And it's like, yeah, but it's 1 in every 4 right now. So we don't have to freak out. Right. And
the days on market also goes a long way. Because if I see a condo that's, hey, this is 3 days on market, I can rest assured that it's not going to, likelihood it's not going to sell tomorrow. There's a period of time that's happening right now, which is 27 days on average.
Yeah. So it could, but again, it's important. It's important when you're working with an agent, because as a general consumer in the marketplace, and this is something that I've always thought should be changed, but again, I'm just one person and this is just my opinion. But I always felt that when I list the property, there should be like a when we go through a listing paperwork, there's a bunch of check boxes. You know, what's the size of the property, what amenities are included in the condo, and you kind of check all these things off. And I always felt that there should be one checkbox for, are you holding an offer presentation? And I think that that should be publicized to the, honestly, I'm telling you why, because it would just be way easier for me to have a lot less explaining to do. And I just think there would be a lot more market information. I could train you to say, hey, Ed, if you see this on the listing, then just know that that's probably not the real price. But instead, that information is not publicly available. And so you have to communicate with the estate agent in order to get that information. So if something is 3 days on market, I would love to tell you wait 27 days. But if I find out and I look into the back end of my system and I can see, no, they're actually holding offers next week, it might only be 7 days on market based on their strategy, right? So there's definitely, yeah, so there's some layers to it. But in my opinion, if I could change the rules right now, it'd be the one thing is add an extra checkbox to let everybody know if this thing's going over asking or under asking, because it'd save everybody a heck of a lot of time.
And emotional
yeah, and emotional turmoil. But the last thing I wanted to go through was just the rental market changes, because I like to just kind of always go through one standard set of data. And so this is the same thing I go through every month, and I take a sample size of the 1 bedroom plus den units in this region, the waterfront communities that have to have balcony and have to have parking that are over 500 square feet. So I can keep the sample size really tight. And what you'll notice is we've had about the same amount of transactions. So we had 60 here and we had 59 here for February. And the price was within the sold, like it says sold price, but this is rental price, was within $3 of each other. So I'm okay with that. So no real big change on a month to month, on a month-to-month basis here on the rental side of things for anybody that's looking at either investing or potentially transitioning to renting. But again, if you're thinking about renting and transitioning to owning, download the guide below because that will actually help you. And then the last thing before we wrap up here are just kind of like the 3 main levers for everybody to understand their affordability. Interest rates, overall price point, and your income are going to be the 3 biggest movers when determining what your affordability is. So look at all 3 of those things if you are looking at entering the market. And that is what I got for you guys today.
Fantastic. Thank you very much. It's very insightful. I've seen some of your videos in the past, but now I've actually experienced it firsthand. So this is very good. And I'm not going to lie, I nerd out with these things as well. Data is one of the biggest things that I look at. Every property that I analyze, the numbers are first. Like I see a building as basically a P&L, a balance sheet, an Excel sheet. Before I even care about what's happening inside. That's the most important. So thank you very much for sharing that.
Yeah, my pleasure. I appreciate you being a great host today, Ed.
Thank you. We'll talk again.
Awesome. Sounds good.
Thank you.